What's happening, everybody? We're talking about interest rates on the rise. Well, guess what? They have been on the rise. So the big question is, what are they going to be doing into 2023? So a couple quick things to note is we have seen the fastest mortgage rate increase since they've kept track of this in January, February, and March. So we are seeing mortgage interest rates creep up. It's not the Fed funds rate, but it does impact what mortgage interest rates do. So the big question is, what do we have to look forward to going into 2023? Some economists that are out there are several of them that are talking about interest rates hovering around 8.5%, maybe a little bit higher, maybe a little bit lower throughout the year of 2023. There are other economists though that really feel that we could see 8% by the end of the year, but as we move into 2023 towards the end of the first quarter, we could see 7.25% to 7.5%. From there, depending on how inflation does, we could then float back down and hopefully into mid to the end of the summer, we could see those 6% interest rates again. The biggest factor that we have to contend with is inflation and what is going to happen with that. So we've seen several 3/4 point increases. We could be looking at another 0.5% increase into December. The biggest indicator of the economists that I follow, which are several, is what are inflation numbers really going to look like when we get into March of 2023. They feel that's going to be one of the biggest indicators of how things are going to look, because what we do know about what the Fed does is they're looking at what numbers have done in the past, and that's when they make the decision on if they're going to increase rates to try to battle inflation. So what does this mean for homeowners? Well, a couple things, or potential homeowners, a couple things that we do know is, according to the home price index, there has been a deceleration over the past 5 months. So each month, homes have not appreciated in value like they have over the last couple of years. That doesn't mean that the market is crashing or the market is bottoming out. It just means if you got 10% in 2020, you got 10% in 2021, and maybe you got 6% in 2022. It doesn't mean your home lost money or that homes are losing money. It just means they're not appreciating as fast this year as they have in the previous year. So with these interest rates then, what does that mean for affordability? Well, it can mean a couple things. Higher interest rates means it could be harder for potential buyers to get into properties. However, with homes slowing down in their value and less competition out there, meaning buyers, there's more opportunity to negotiate. There are other things out there in terms of interest rates in order to buy your interest rate down or to lower your interest rate, which I'll cover in another video. But for now, we're talking about interest rates and the prediction on if they're going to go up. I appreciate you checking out the video. We'll see you at the next one.